26 years of CNBC TV 18.
Stocks on Wall Street closed the session mixed ahead of the Federal Reserve's final interest rate decision of the year. The Dow sheds 180 points while the Nasdaq and the S&P 500 end flat. Asian markets are largely lower as investors await the Fed's interest rate decision and the inflation data from China that has just come in. The GIFT Nifty is indicating a lower start for our own markets. Crude oil prices edge lower with investors keeping a close eye on peace talks to end Russia's war in Ukraine and concerns about ample supply. Gold prices rise ahead of the Fed's rate cut decision. Silver also hits a record on rate cut bets. The DGCA has issued a fresh directive for Indigo. The new order directs Indigo to curtail flights by 10% on high-frequency, high-demand flights and to avoid single flight operations on a sector. Airline CEO says the operations are stable and the airline is back on its feet. And the India-US talks will take place today and tomorrow on all trade-related issues. The US delegation led by Deputy US Trade Representative Rick Switzer is expected to discuss tariffs, even as talks will not constitute as an official round of negotiations. Two very important days lie ahead of ours and the global markets. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's take a look at how the Asian markets have started off today. And in line with how the global markets remain on the edge, the Asian markets are no different. The Hang Seng currently down around 0.6%. The Taiwanese index is the only outlier in what otherwise is a red-looking screen across the Asia-Pacific, trading with gains of around 0.4%. But the losses are also coming from Japan. The Nikkei is down around 0.4%. The Shanghai Composite, though, is down 0.7% currently. And the Kospi in South Korea is down by 0.25%. But the Shanghai Composite's underperformance also comes on the line of the consumer inflation data that has come in China, which has hit the highest level in nearly 2 years. The CPI has raised up around 0.7% compared to last year, which is the highest level since February of 2024. The CPI inflation was up 0.2% in October, but was in line with what the economists had expected of around 0.7%. And that shows the underperformance coming in on the Shanghai Composite and the Hang Seng. The GIFT Nifty, well, after the choppy session that we saw yesterday, the indications from the implied open are also that today may be no different. May still brace for some more volatility ahead of the Fed decision tonight, and the implied open currently suggesting a 60-point downtick for our own markets. But to set you up for today's trade, our research team is right here to tell you everything that you need to know for today's session. Vivek is here to tell us all the market cues. First up, Vivek, good morning.
Well, that's right. So, when you're looking at, what exactly to keep an eye out for as far as market is there today, like you mentioned, the FOMC meet outcome is something that the street will look forward to very closely. A 25 basis point cut is what the street is anticipating. And ahead of that, US markets ended largely mixed, trading near the flat line mostly. Now, when you're talking about oil prices, day first you saw a 2% cut yesterday. Again, it was another fall, and the Brent now trades near close to the $62 a barrel mark. Now, talking about Indian markets, like you mentioned, the topsy-turvy day yesterday. India, which continues to surge. Market ended sharply off flows yesterday, and that was the key point. And given the fact that the broad end of the market did see significant buying, that ensured that the advance decline ratio was in favor of the advances, at least towards the close of the session. Two stocks, that had tanked significantly going into yesterday's session. Both of them saw significant recovery. The first one, of course, was Keynes, and the second one was Indigo. Both of these stocks managed to recover, and that aided a bit of sentiment, especially across the broader end of the markets. Well, when you're talking about the primary market action, it is extremely strong. 3 companies list today: Meesho, Vidyawires, as well as Equus. All 3 of these companies will list. It will be important to see whether the market manages to give a premium to these listings. Remember, 3 IPOs are ongoing. On day 2, Wakefield managed to see subscription of close to 39%. Corona Remedies, strong subscription over there, almost 9.3 times. And on the other hand, 3 IPOs also opening for subscription today. So Park MediWorld as well as Nephrocare Services will be in focus. It will be interesting to see the kind of response the market gives to these IPOs. Remember, large equity sale as well in terms of Swiggy. Asian markets, GIFT Nifty, like you mentioned, all pointing to a soft start for our markets today.
Well, the primary markets are anything but quiet as of now. Vivek, thank you for that update. Ria now is here to tell us the stocks that should be on your radar. Ria, good morning.
Well, good morning, Homers. Let's start off with Swiggy, which has opened its QIP and approved the floor price at rupees 390.5 per share. Sources have told us that the QIP size is rupees 10,000 crores with an indicative issue price of rupees 371 per share, which is a 6.8% discount to the current market price, and the total equity dilution is seen at 10.8%. Moving on to Graphite India, which will be in focus after signing an exclusive partnership with Kivoro to commercialize and distribute graphene-based heat transfer additives in India. Tata Power will be in focus after commissioning their 400 kilovolt Koteshwar Rishikesh transmission line. Keep an eye on Godrej Agrovet as well. An arm of the company called Creamline Dairy Products has signed an MOU with the Telangana government to invest rupees 150 crores for dairy processing for a dairy processing unit across 40 acres. GPT Infra will be in focus after emerging as the L1 bidder for an order worth roughly 199 crores from Northeastern Railway to construct bridge substructures. IRB Infra has come out with a business update. Their November gross toll collection has gone up by roughly 19.5% on a year-on-year basis. Zydus Life will also be in focus after partnering with Formicon for licensing and supply of a biosimilar to Keytruda in the US and Canada, and this will mark the entry of the company into the North American biosimilar market, debuting with an immunotherapy product. Keep an eye on Nalco as well. They have awarded an MDO contract for Potangi Mines to Dilip Buildcon for a period of 25 years with base mining charges at rupees 423 per ton. Hudco will be holding a board meeting on the 12th of December to approve a fundraise worth roughly 2,500 crores via NCDs. And lastly, Anupam Rasayan will also be in focus today. They have signed a definitive agreement to acquire US-based Jayhawk Fine Chemicals Corporation for $150 million.
Riya, thank you for that update there. Sudarshan now joins in with cues from the FNO space. Sudarshan, good morning. A very, very volatile session, but what is the FNO data indicating today?
Good morning, Harma. So weekly expiry is done, and from the FNO side of the market, there is no indication which can make you feel or which can help you turn bullish as far as this market is concerned. We don't think that Nifty is going back to the levels above 26,000 anytime soon. So the range for Nifty now has become from 25,500 to 26,000. Now look at the flows. In the index futures, yesterday also we have seen FIs selling more than rupees 700 crore. But in the stock futures, they did some buying, and the buy figure was around 1,365 crore. Now, longs exposure has reduced to 11%. On the short side, exposure has increased to 89%. They have reduced long positions by 2,400 contracts. They have added short positions by almost 1,530 contracts. On the option side, on the call side, we have seen 26,000 call has seen an increase of 37 lakh shares in the open interest. 25,900 call has seen increase of 33 lakh shares in the open interest. But for both these call options, we have seen a sharp fall in the premium. While on the put side, two options that were the most active ones, 25,400, which has seen an increase of almost 35 lakh shares in the open interest with premium rising to 16. And for 25,800, premium has increased to 97. So support for Nifty, first support 25,730. If we fail to hold that level, then we can slip to as low as 25,500 or 25,600. Resistance remains around 26,030. That is 20-day moving average. Nifty Bank support would be 59,000. Resistance would be 59,500. Two stocks are in the band, and those are Saman Capital and Bandhan Bank. Kaynes Technologies, after moving almost 16% higher yesterday, it has come out of the band. Two stocks that have seen fresh longs. Vodafone Idea yesterday has recovered entire losses that it had seen on Monday, and second one is PV Fintech, or we say Policy Bazaar. Among the fresh short side, Asian Paints and Hero MotoCorp.
Vodafone Idea continuing to tease that FPO price of 11 rupees. Sudarshan, thank you for that update. Now, even as Indigo cripples back to normalcy, the government in a fresh order last evening has stated that 10% of the airline's operators' flights have been curtailed. Indigo CEO Peter Elbers, however, claims that the operations are stable and the airline is back on its feet. Now, this even as over 400 flights were cancelled across the country yesterday. However, the number of cancellations are lower than the last few days. All of this comes after a disruption in Indigo's operations that saw over 6,000 flights being cancelled in a week, leaving nearly 9 lakh passengers stranded across airports. The DGCA has asked the airline to submit a revised schedule by today. Let's take a short break here on Power Breakfast. All the action from Wall Street on the other side. Stay tuned.
26 years of CNBC TV 18. Years of CNBC TV 18.
Welcome back. On to Wall Street action. Indices over there remain on the edge ahead of the all-important Fed decision. The Dow was the underperformer though, and that's because of JP Morgan's underperformance yesterday, where the management projected higher than expected costs for next year. The S&P 500 and the Nasdaq relatively remain flat, as is the case ahead of a major event. Now, as investors wait for the Fed's rate decision due later tonight, here's Steve Leisman with the findings of the CNBC Fed survey.
The CNBC Fed survey showing or expecting a hawkish cut, that is a cut followed by a pause, but also showing deep divisions over whether the Fed should cut at all, likely reflecting the same split on the committee. Take a look. 87% think the Fed will cut this week, but only 45% think the Fed should cut. That's a kind of historic differential there for our survey. 2 dissents are expected. That's the median. And only 35% are expecting a rate cut come January. Scott Wren of Wells Fargo Investment Institute writes in, the Fed will cut in December, even though you can make a very rational argument that they should not do anything. The biggest risks out there to the economy, well, continued high inflation, sort of surging to the top. It had been number 4. The AI bubble bursting, that's been there, or that's a new entrant there. The concern about Fed independence, the fiscal deficit, and administrative policy uncertainty rounding out the top 5 risks to the economy. Meanwhile, the growth outlook has been ticking up, running at 2% this year and higher next year, while inflation forecasts remain above the 2% target. So that's part of the problem there. Diane Swonk, chief economist, KPMG, says most are underappreciating the likely stimulus due to record tax refunds in the first half of 2026. That means we're also likely understating the risk that inflation could stick. And not much downside here seen in the job market, with the unemployment rate rising only a few tenths, or forecast to do so next year, and declining a bit in 2027. Still, several respondents are saying the Fed needs to cut here because of potential weakness in the job market. Alan Sinai of Decision Economics writes in, the Federal Reserve is behind the curve again, this time on the widespread weakening of the labor market. A preemptive 50 basis point cut in the federal funds rate is the right thing to do. And that maybe explains what motivates the cut at this meeting. The greater risk, or the belief on the Fed that the greater risk is that when all this data finally come out, and that is next week, it's going to show a weak labor market more than the risk that it's going to show higher inflation.
Steve Leisman, thank you for that update. Let's also now listen into what the former Cleveland Fed President Loretta Mester had to say on the Fed's rate decision tonight.
I think they definitely will cut. I mean, they signaled that quite clearly in President Williams' speech, the New York Fed president, before the meeting. So I think they're going to follow through with that last cut. I do hope that they signal that, you know, they think the economy has gotten to a place where policy is in a good place, and they are going to slow down the cuts, because I am more concerned about the inflation risk, the stickiness. But you know what gets attention are the things changing, and we've seen this weakening or softening in the jobs market. Yeah. So that gets the attention for a while. I do think we'll get weaker data, because I think we're going to see government jobs in the new data being weak, because that's the end of the furlough or the delayed firing of the government employees.
Let us now get to the latest in our Trump Watch segment. Speaking at a rally in Pennsylvania, President Trump doubled down on his tariff regime, saying that people are, quote unquote, starting to learn the benefits on especially how tariffs have helped rebalance the manufacturing in the U.S. and supported farmers with government aid. On the economic front, Trump also took aim at the Federal Reserve, signaling a desire for change. He stated that, quote unquote, we are going to be making a change, fortunately, referring to the Fed's interest rate policy. The president also said that he's going to be looking at a couple of different people, but has a pretty good idea of who he wants as the next Fed chair. Take a short break. Cues from the commodities market on the other side. Stay tuned.
"26 years of CNBC TV 18. "26 years of CNBC TV 18.
Welcome back. India and the US held their Foreign Office consultations in New Delhi, co-chaired by Foreign Secretary Vikram Misri and US Under-Secretary of State Alison Hooker. Both sides constructed a wide-ranging review of the comprehensive global strategic partnership, touching on trade, defense cooperation, technology, energy, critical minerals and resilient supply chains. They also discussed key regional and global developments, reaffirming their shared commitment to a free and open Indo-Pacific. Meanwhile, the India-US trade talks will take place today with a US delegation led by Deputy US Trade Representative Rick Switzer, who is expected to take up tariff-related issues through these talks, which are not an official negotiation round. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. A new high for silver ahead of the Fed policy.
It is, yes. What an overnight gains that we've seen in many of these commodities. Hormuz silver price has gained 4% overnight. They're up by 111% in this year until now. And well, yes, we're looking at an all-time highs continuing in case of silver, especially ahead of the U.S. Fed meeting. And then the silver also is being considered for inclusion of Section 232, which makes import dependence on many of these metals as national security. And if it does come under that, then you could be looking at tariffs coming in for this one as well. So that is what seems to be bothering silver even more. And add to that the fact that the speculative activity is very, very high with silver longs and open interest continuing to stay higher there. But it's not just silver. In the overnight markets, we also have seen copper prices take an all-time highs as well. $700 a ton has been taken off. We do understand that U.S. has been stockpiling on copper for some time right now. China also has set domestic growth as a top economic priority for 2026, with real estate and consumption being the top things there. Copper perhaps is gaining because of that as well. And then you have the gold prices, which has hit 45 times a record high in this year. Well, we also are looking at China adding gold to official reserves for a 13th month for the month of November, also supportive for that. So all of these three metals continuing to do quite well.
Manisha, thank you for all the updates there from the commodity space. Take your leave on this edition of Power Breakfast. From me and the team, thank you for watching. Bazaar Morning Call up next to set you up for this all-important trading session.
"26 years of CNBC TV 18.